Okay, the Nigerian Stock Exchange yesterday held its 2020 market recap and gave an outlook for 2021. What were the major highlights? Bolaho Ologuro, research analyst at Codros Securities, joins us now. Good morning, Bolaho, and thank you very much for joining us. So tell me, what for you were the major highlights of yesterday's event at the NSE?
Good morning, Chimeze. Thank you for having me. The event is essentially an annual event where the Nigerian Stock Exchange examines the performance of the equities markets in the prior year. Also, they use that event to also outline the strategic initiatives or milestones achieved by the exchange in the prior year, and also provide insights on expectations for the current year. So for the event yesterday, the exchange highlighted a couple of initiatives that was implemented in the prior year. We look at revamping of the NSE data portal to facilitate ease of obtaining data. We also consider collaboration with the Securities and Exchange Commission to organize training sessions for local players in order to sensitize them on derivatives trading. The NSE also gave insights on the demutualization exercise that's kicked off in March 2020. And with regards to the outlook for 2021, the CEO of the exchange was slightly positive of continued bullish performance in the equities market. And I think thus far, since the start of the year, the equities market performance has remained broadly positive.
Okay, so the CEO also noted caution in his growth expectations for the market this year, considering the second wave of COVID-19 in Nigeria and globally. Do you share the same sentiment?
Yes, certainly. I think the recent increase in the number of new cases, not just in Nigeria, in advanced economies, and we look at United States, United Kingdom, and even in Asia, certainly that is a major concern in terms of prospects of a V-shaped recovery in the global markets. And that is likely to sort of dampen expectations of a V-shaped recovery, which would likely put further pressure on commodity prices. And like your earlier speaker mentioned, we've seen oil prices gravitating towards 2020 levels in February, when we saw oil trading at around $57, $58 per barrel. And as we speak, it is currently trading around $56 per barrel. So over the past 3-4 weeks, the oil market has been supported by news of fiscal stimulus announcement from United States, in addition to positive developments on vaccines. However, with the recent cases of coronavirus, new cases of infections in advanced economies, certainly that poses a major headwind to prospects of continued recovery in the global economy, and that remains a major pressure point for the oil markets.
Now, for you, what factors do you think will shape the performance of the equities market in 2021?
Okay, so just to take a cue from the event we had yesterday, like I mentioned earlier, in terms of how the markets performed in 2020, the markets delivered a stellar performance, as the return for 2020 was around 50%. And that was largely driven by the low yield environment that boosted risk appetite for risky assets, of which stocks actually benefited from. So heading into 2021, I think direction of yields in the fixed income market is one of the critical factors that would shape performance of the equities market. And besides that as well, I think expectations around corporate earnings also is another critical factor to watch out for across different sectors: the banking sector, consumer goods, cement industry, and the telco space. Beyond that as well, we also think that development in a macroeconomic landscape is also another factor that would sort of influence investors' appetite for risky assets. And in that regard, you're looking around inflation expectations, expectations around GDP growth. Are we likely to see a stronger growth in 2021 compared to expectations around contraction for 2020? So we think these are the three major factors that would influence the direction of market, the equities market in 2021.
the factors that will shape the market. The transition of the NSE to a demutualized exchange group is one of the factors that will shape the market. How would this support the exchange's vision to become Africa's preferred exchange hub?
Yes, certainly. I would think that is a positive development from the exchange. So the CEO highlighted that they're looking at a listing by introduction, and that we expect that to be completed by the third quarter of this year. As things stand now, the exchange is awaiting regulatory approvals from the Securities and Exchange Commission, and that should pave the way for a potential listing by introduction, which may be followed by an initial public offering. So for us, we think that move is consistent with global market practices. When you look at what is obtainable in London, for instance, where you have the London Stock Exchange listed on the market. And of course, we think it's also a move that could potentially attract foreign portfolio interest in markets once again, particularly when you consider the fact that in 2020, foreign investors were broadly net sellers of Nigerian equities. So if we look at, when we looked at the data on Nigerian Stock Exchange for domestic and foreign portfolio participation, we observed that it was only in the month of May that we recorded net inflows into Nigerian equities, which implies that in all the remaining months of the year, foreign outflows outweighed inflows, resulting in net outflows. So for foreign investors, we think the fact that over the last 4 years, they have been trapped in the FX market on the back of severe liquidity challenges that has sort of reduced their appetite for risky assets in Nigeria. So we think, however, with the potential listing of the Nigerian Stock Exchange, we think that is a major move that could potentially stimulate foreign portfolio interest once again in the Nigerian market.
Now, the exchange also reiterated its intention to aggressively pursue cutting-edge products and services, access new markets, and deliver better value to its stakeholders. For you, following the markets, what do you hope to see in this regard?
Yeah, so certainly, I think if we take a cue from some of the strategic initiatives adopted by the exchange last year, they actually launched a platform known as XPO. And what that platform seeks to do is to ensure that investors can subscribe for public offering seamlessly just from the comfort of their homes by logging on to web or even using a short USSD code, compared to the traditional practice of you downloading documents from the internet, filling those documents, and then you're having to submit it to your registrar, and then making payments in the bank in order to confirm payments or subscription for public offerings. So we think that is a major move that could potentially engender increased listing activities on the exchange in 2021. For initial public offerings, I think the market has pretty much dried up over the last 2 to 3 years, and we've only seen listings from the likes of MTN and Airtel. So we think with improvements made in the area of trying to make listing process more effective and seamless, we think that is a major a positive move that could support improvement in listing activities in 2021. Aside that as well, the exchange has also encouraged the development of market-based indices. So we've seen a number of stockbroking firms also floating different indices just to deepen market penetration and also increase retail participation in the equities market.
The MPC will kick off their 2-day policy meeting next week. What are your expectations?
So we expect the Monetary Policy Committee to kick off their meetings actually commencing today, and they should conclude tomorrow, and of course give markets the final decision at the end of their meeting. So based on their last meeting in November, if we look at how macroeconomic developments have evolved, in the domestic space, we think inflationary pressures still remain largely driven by supply side factors. And as at their last meeting, inflation stood at around 14.23% based on the latest data available then for the month of October. But since then, we've seen inflation galloping to around 15.75% as at the end of last year. So we think one of the major highlights will be from the MPC is that they will reiterate the fact that inflation still remains largely driven by supply side factors. As a result, tightening to curtail inflationary pressures may not be an effective policy move. Aside that, in the external environment as well, I think they will also note the significant improvement in the oil market since their last meeting, where oil prices were trading around $43 per barrel. But as we speak, we've seen oil prices inching up to around $56 per barrel. So we think the rally in the oil market is also a significant improvement that would also put the CBN in a better position in terms of getting dollar inflows that will be needed in stabilizing the FX market. So on the balance of factors, we think the Monetary Policy Committee will lean towards status quo. In other words, retain the MPR at 11.5% alongside other key monetary policy parameters, while allowing previous policy actions to continue to work through in the economy. However, we also note that there are concerns around the foreign exchange framework of the central bank as we speak, and the fact that we've continued to see liquidity challenges in the investors and exporters window. So we think investors would also be looking for increased clarity on what would be the likely foreign exchange framework that will be adopted if we are to actually solve the crisis in the foreign exchange markets.
Well, Bolaho, that meeting, MPC meeting, is actually scheduled for Monday and Tuesday. I think there's a little bit of a mix-up there. The central bank didn't release the calendar on time, so it's scheduled for Monday, 25th and 26th. But just a quick one before I let you go. The first bond auction is scheduled to hold today. Give us some insight into that, a quick one.
The DMO is looking to raise 150 billion, split equally between the March 2027, March 2025, and July 2045 instruments. So at that auction, we expect investors to demand for higher yields, given expectations around inflation, the fact that we also expect fiscal deficits to widen further in 2021, when you consider the fact that government exceeded the fiscal deficit for 2020 by about 34%. So we expect investors to demand for higher yields at the auction. However, we think the DMO will be at a dilemma, considering the fact that they probably have to adopt a similar strategy they adopted in 2020 when they front-loaded the bulk of domestic debt issuance.
Thank you very much.
So at this auction, we think the DMO would also be trying to get as much.
Okay, Bola.
So we think the DMO would likely offer slightly higher yields to investors, given expectations around inflation and increased deficit financing from the government.
All right, thank you very much, Bolaho. Thank you very much. It's been a pleasure talking to you. Thank you for your time.